What's going on, YouTube community? Thanks so much for clicking on this video. I want to get right into it, and I have a live recording of my trade management from this morning on the pound dollar. So I want to be able to give everybody direct insight to how I see the markets when properly entering them. It's been a beautiful start to the Monday. So if you enjoy anything in this video, make sure you go ahead and give it a big thumbs up, hit subscribe if this is your first time coming to the channel, and I hope you guys enjoy today's Monday New York session breakdown. So make sure to go ahead and join the free Telegram channel so you don't miss any direct information. I send private and unlisted links inside of that Telegram chat to give you all extra insight to the markets that I don't bring on YouTube every single day. So make sure you go ahead and join that channel. What's going on, traders? Hope everybody's had an amazing start to their week. This is a recorded look-in and voiceover of the trade that I took this morning on the pound dollar. Now, if you tuned into the Sunday night markup session over the recorded unlisted video on YouTube, you would see the confluence that we have here at the purple imbalance between 129 and 129.30. So very shortly here, right around the 9:30 time is when GBP USD pushes up into our entry zone at 129.10, and you see me execute that trade right there. Went ahead and showed the positions, stop loss at 29.22, so risking about 12 points. Right, I showed you guys where the market opened. We trended up about 100 pips through Asian and London, and then ultimately we made money at that 129 level when we reached it and consolidated there for a good half hour. Now, as price pushes towards my stop loss, right, I'm not too worried about it because number one, I earned it at the 50% of the imbalance, and number two, that 29.22 stop loss is based on a 15-minute candle inside of the imbalance that we can backtest after the recording. So I'm just showing you guys the example of the market just trending through, and as you see, we're getting short-term rejection. My first scale price, my first scale zone is going to be 128.90, which is up about 20 pips. My take profit, as you see, is at 128.75, which is going down to that next quarter level. So this is in 4 times speed. This actually ended up being exactly an hour trade. So from 9:30 to 10:30 is all this recording is, about 5 minutes worth of price. Here shortly, I'm going to be speeding it up to 8 times. Right here, I'm showing you guys the pre-New York buildup, and then we drove down and then drove up. So now we're about to transition into the 8 times speed. This is where now over the next half hour, we really just hang out around this 2,900 price, and you just got to stay true to what you want to look for. We get close, and I was about to scale right there, but I didn't quite get that 28.90 price. So we're going to go ahead and let it keep playing out. Right, showing you that you got to allow that market to still trade back up above 2,900 to go fill that imbalance, right? If you move your stop loss to break even too soon, you would be stopped out right here, right? So you got to wait for that market to make that evidence of a lower low at 128.90, and I think that's a big thing for when it comes to you guys asking about when to move your stop loss, when to go into profits. Now, again, if you wanted to go into profits when you were 15 pips up and move break even, then you would have, but you would have been stopped out. Versus if you hold until we break this support at 128.90, you're going to be in a much better position and understand, just how key the market is in playing these prices. So still getting nice rejection right here, just holding off, right? Being patient. It's literally only been about 45 minutes since entry. We start showing some good evidence of a bearish 5-minute candle here. And now over the next minute of this, we're really going to see that market go push down into our area, and just beautiful price action. If you guys saw the screenshots of the dollar index, we were trading down into that imbalance of 93 to push up, and that's why GU pushed up to push down. Beautiful confluence here on a Monday. Nice 35 pip move right here. Even a little bit deeper, she ran down to 65. And it's nice. So as we push into this floor at 28.90, I'm going to go ahead and scale, take about half my position off, right? And we're going to go to move stop loss to 29.05. So now that we've gone up 20 pips, I went risk free. We took that little pull to the left. We trade into the 50% of this imbalance at 28.85. And I got my take profit set right there at 28.75. I'm cool with taking 35 40 pips on this move. We hang out in the imbalance for a little bit, and ultimately it didn't actually close me there. The spread opened up a little too high. I'm showing you guys here how you can play the open to 50% of even that institutional candle, and 8 pips drawdown for about 25 pip move. And at the end of this, we do smash TP right there. Perfect. So briefly, I'm going to go ahead and touch on why this sell entry at 2,900 made sense this morning, right? As we looked last night, we were talking about the pool of money up under here, but if we did trade higher, what could we trade into? We could trade into these possible imbalance areas, right? This was our first area of imbalance, wick here, all the way through this candle to wick here, right? Now, what makes sense inside of this 30 pip imbalance? Well, maybe this price of 12900, right? Maybe the 50% of the imbalance here at 2910. So that's really what I was looking at. So as we came up and approached this price during that New York hour at 9 o'clock, you want to dive into smaller time frames and see if the fractal market is going to show you what you're looking for. So we're going to go dive into this imbalance on a smaller time frame. So as we go look at the 15-minute, right? The 15-minute isn't going to give us, I'm going to go ahead and delete this red line, which is where my stop loss was, right? There's nothing really new on the 15-minute. You see just still imbalance here under 2,900. But once you get above that 2,900 price, you see this wick retracement into here. So there's not a whole lot going on. So already, if you want to position yourself, you know, in some kind of sell position from 29 to 29.10, I really wouldn't risk anything up above this wick right here at 29, 23, or ultimately 22, like you saw in the recording. But I'll show you why this makes more sense on a 5-minute time frame. Right? So as we continue to look left to get right, now as we look at this price inside the purple zone, what do we see evidence of? We see evidence of a sponsored candle that happens right inside of the zone. So what's crazy, right, is that this 50% of a bigger time frame imbalance lines up in between the open and the 50% of this smaller time frame candle, right? And I'm just going to eyeball the 50% here. So now we have entries 2908, 2914 with stops up above wherever they stop buying to sell on that candle, right? I'll show you guys on a 1 minute, right? What happened? We had these lows. We drive below the lows. We come retest the lows, and then we take off. So all of this right here, right, can be traded up into. And as I go ahead and delete that higher time frame imbalance and delete this, look at your 1 minute imbalance. Just watch how powerful this is. Right? This is our 1 minute imbalance. This is the only imbalance that lies in between the 2,900 and 2,923 price. So watch what happens. Right? Literally beautiful price action. So what do? And I'm going to start this and I'm going to show you guys on the minute, and I'll work out of time frames, right? As we approach that 9:30 time, we're going to go ahead and consolidate in this area, right? 9 o'clock to 9:30, we consolidate at 2,900, making that pool of money. Now you want to wait for that evidence of them shooting above. And as you see, there was 1, 2, 3, 4, 5, about 6 minutes worth of price action that was up here in that 29.10 range. What happens as soon as we get to that 29.10 range? You guys can see as soon as we push through that 29.10 price, I went ahead and entered the sell position. The market decided to run up into that 1 minute imbalance. But as soon as this candle trades through the imbalance and closes right here, I mean, that is almost every significant confirmation that you need to take this thing short. You could even move your stop loss down here at about 29.19, right above this wick. And as soon as this dips here, let the market come trade down at the lows, right? You're going to get a retracement wick here. And then ultimately, we saw the market trade down, as you saw in the recording, where we took profits here and took profits here inside of, right, these 1 minute imbalance areas. Right, so beautiful market structure, right? Take profit on imbalance 1, take profit on imbalance 2, and take profit 3 was pretty much down here at these lows. So just very, very beautiful rejection on this price action. And whether you enter here while the market's running up, And hey, if it would have run 20 pip, an extra 12 pips, then I would have been stopped out. But overall, market played that 1 minute imbalance to the left side. So very, very beautiful price action. You guys see it here, right? After they made that institutional candle and drove down, what did they have to do? Come fill the imbalance that lies within here. Now, what the other cool thing is, right, as I pull all the way back, why did we have such a confluent setup here at 2,900? Because we were waiting for the index, right? Index was here. We said, hey, or, I said, hey, let's watch the market trend down into the 93 price, maybe trade into this imbalance and then reject. So as the dollar got weak and then strong, the pounds got strong and then got weak. So I hope everybody found this insightful. Let's go ahead and continue to crush it this week. Much love, family.